So, today we're here to talk about some changing regulations in Singapore. And I think, Wendy, there's no better person to kickstart this conversation than you. Can you explain the details of these new TRM guidelines for FI and also the third-party providers to the financial industry? Obviously, the key component of these revised guidelines is about reinforcing the importance of incorporating security controls in technology departments and delivering life cycle risk management as well in the deployment of emerging technologies. But what does that really mean, and how does it affect us as small, medium enterprises?
Sure, Lisa. Thank you for the questions. First of all, I must say that when we look at the MAS technology risk management requirements, it's been around for like almost more than 2 decades. And if you look at what the guidelines are trying to address, and they are actually applicable to all financial institutions in Singapore. Now, one thing is, it is very unique in Singapore that we have one supreme FS regulator, and that is the MAS or the MAS. So all financial institutions, what it means is that it will include banks, insurance firms, asset management, brokerage firms, as well as payment services firms. And it should be noted that, because of the revised Payment Services Act, more and more organizations are now going to be regulated under the new Payment Services Act, and in turn will have to comply with MAS TRMG. I've been advising clients on this topic for the last 10 years. And I must say that when you look at the different maturity levels of financial institutions, it ranges from it ranges from a big spectrum. But if you look at really in short, all regulated FIs must comply with the technology risk management guidelines as well as the other related regulatory requirements that are put up by the MAS. So if you really look at the transformation, aspect of financial institutions, and in fact, in the last 1 year, many organizations, including the FIs, have actually accelerated their digital transformation. And because of that, as well as the reliance on emerging technologies, such as cloud technologies, APIs, agile software development, the new update to TRMG is really to address such new developments as well as new technologies. So when we look at the new TRMG, as the industry will fondly call this in this aspect, there are a few revised and new expectations from the MAS. I'd like to touch upon 4 key areas very quickly. The first one is actually the foundation and very fundamental technology, governance, and risk oversight. This actually includes a key change whereby the board of directors and senior management will now need to approve key appointments to actually strengthen the governance and management of technology and cyber risks. Such key appointments are actually explicitly called out in the new requirements, namely the Chief Information Officer or Chief Technology Officer role, CIO or CTO, or you can call them also the head of IT, as well as the Chief Information Security role. And what this also means is that this is also the clear indication of the MAS, whereby they expect that all financial institutions are now required to strengthen their 3 lines of defense. Second point will be third-party risk management, as you rightfully pointed out. There is a major change, and it will impact all the third parties that are going to or are already engaged with financial institutions to provide services in one way or another. With the increasing reliance on third-party providers, the FI ecosystem now extends beyond the boundaries of the FIs, and that is a concern of MAS in light of recent developments and trends in the cyberspace. Thirdly, security requirements for project management and development practices. These are enshrined in the new chapters, whereby security by design, DevSecOps, agile development are called out explicitly as new requirements for FIs to comply with. And then finally, I would say the emphasis is really around cyber resilience. It can be seen in the new guidelines where 3 dedicated chapters or sections are actually focusing on security and cybersecurity aspects. Now, you must all know that the MAS TRMG and the MAS requirements on technology risk has always been a security, likewise a cybersecurity regulation. So it has always been the emphasis of the regulator to actually protect safeguard the financial ecosystem. So with the new chapters, what this means is actually that, other than just having basic security controls, cybersecurity surveillance operations, that means your SOC operations type of a setup, as well as the need to actually conduct cyber assessments that are beyond your traditional VAPTs, vulnerability assessment and penetration testing. The emphasis is on adversarial attack simulation exercises, which is what we called red teaming as well. So with that, let me just really conclude this part is that really in light of the recent spate of cyber attacks on supply chains, which actually targeted multiple IT service providers, the FIs are also now implicated because they have been outsourcing and they have also increased a lot of their outsourcing and reliance on third parties. So what this means is that FIs now have to conduct more rigorous risk assessments and due diligence actually before they engage with any third parties. In addition, FIs are also required to enforce a stronger vetting process to assess third party suitabilities in connecting to them, especially if they're using APIs, given that APIs, as mentioned, is one of the key technologies used. Finally, with this revised MAS TRMG, we can see that third parties that are working or are intending to work with FIs will be subjected to even more stringent assessments as well as compliance requirements.
It sounds very expensive, Wendy, is what I know everybody in the ecosystem is thinking. MAS obviously have some incentives to help them get started, right?
Yes, I can talk a bit more later, but in Singapore, especially when we talk about the fintech community, there is the Fintech Association in Singapore that has been actually working, it has been working very closely with the fintech community as well as the regulator to try and, I would say, inspire and encourage the fintechs to adopt various, good controls to actually service the financial institutions.
Fantastic. And I do recall many people in our ecosystem talking about up to $120,000 in reimbursement on new softwares in order to implement such tools and technologies. So that's really, I think, a godsend for so many people who in this time of great constraints in the pandemic are finding it hard to think about how they transition to that next level. Fantastic. That was really clear and helpful. So just to summarize, we have technology governance and risk oversight key changes. We have a focus on third-party risk management. We have new security requirements for project management and development practices, and we have a new emphasis on cyber resilience. This is really important, and thank you so much for helping us synthesize what is a rather robust requirement document.